All right, good evening, everybody. Good afternoon, wherever you are. It is September 2nd, 2022. It was the last trading day of the week and also the second trading day of the month. Now, today wasn't too busy, wasn't too much of a busy day on Wall Street, but we did get some important economic news. We got the U.S. non-farm payroll numbers out. Now, if we look back to the non-farm payroll numbers of last month, they came in well above economists' expectations, right around 529,000. It wasn't that much of a crazy beat this month, but very strong nonetheless. Non-farm payrolls rose about 315,000 in August. That is ahead of the 270,000 that was expected by economists. Now, I would like to say a couple things about this. So, I think this is going to be a number where it won't materially impact any sort of monetary policy in the immediate term. So here's what I mean by that. I don't think it's a strong enough beat or a strong enough number like we got last month to where the Fed would have to make an aggressive policy change to say, okay, we're thinking about a 75 basis point rate hike. Now we definitely have to go 100 basis points or a full percentage point or something like that. I don't think this was a big enough beat to do that, but I also don't think it was a slow enough sort of economic indicator for the Fed to pivot. So I think this is just going to be business as usual. I think the Fed is going to raise by 75 basis points at the September 21st FOMC meeting. But I did notice a couple things. So a little bit of anecdotal data here that I want to talk about tonight. I have been noticing a lot on my LinkedIn feed, people posting their unfortunate circumstances that they've been laid off from their jobs, that they are looking for a new position or they're open to work. So I wanted just to briefly, as the stream goes on, I wanted to see if you guys are seeing any of that on your professional networks. Now, this sort of reminds me back to when COVID just hit, right? Anytime you would look through your LinkedIn feed, you would see an absolute wave of people saying, hey, unfortunately, after 10 plus years of working at such and such company, it's, I regret to inform my professional network that I've been laid off. I've been seeing a lot of that, which is concerning, and not only from, companies that you would think would be laying off during this time, but quite profitable companies too, and some of the companies that we've been talking about on the streams. So a lot of my professional network in tech, in healthcare, and hospitality, unfortunately, they are feeling a pretty big hit from layoffs. Now, I will say this. It does seem, whoa, there was a huge rat. I'm not sure if you guys saw that on the camera there. It does seem that the people who are getting laid off, the good news is that they are able to be absorbed back into the workforce relatively quickly. So if we look at this new non-farm payroll number we got out, one of the things that, if we look at the data, one of the things that was a little bit encouraging to me is that the labor force participation rate is actually ticking up a bit. And I think this is happening for one of two reasons. And the first reason why I think that is a lot of the people who were quiet quitting, so to speak, during COVID, or just quit their jobs altogether to try to start their new own company or own business, or maybe they retired early. I think a lot of those people are taking into an account the inflationary environment that we're in. Maybe they're like, okay, if I just draw down, 7% of my equity in my portfolio, over the next 20 years I could retire comfortably. But when you did the math, you were betting on, 2% inflation. Now you're looking in the face of 8 to 9% inflation. So maybe a lot of people are entering back into the labor force, which we'll talk about tonight, which I actually think this is a good piece of news as it relates to the market. Hold on, let me put my computer away. Because this is what the Federal Reserve wants to see, right? The Fed wants to see that labor force participation rate ticking up. They want to see companies having an easier go about in relation to hiring. Because if companies are finding it very, very difficult to hire employees, well, that means wage pressures are going to continue to go up putting even more pressure, upward pressure on inflation. So we also got some data coming out that wage gains did go up, but they're decelerating. So we'll talk about that. But first, let me see who we have in the chat, everybody. It's a Friday night. And just really quick, please excuse my voice for tonight. I'm having a little bit of an allergy situation. Usually around this time of year, I get crazy amount of allergies. And so just please be cognizant of that. But we have Melissa White. Good to see you. Vinny Castellano is here. Jeff. Good to see you, Jeff, says we're live. Dante Rose. Sinjib is here. I see Austin City Limits. I see Cayenne Pacific. Good to see you. Wendy England, British Gray, FredX, Ethan G. Says, hey Tom, can't believe summer went by so quick. I know, it's ridiculous. Solo is here. Let me see, my Wi-Fi is on. I see Bidzita Lopez, British Gray, Vinny Castellano, Maria Castellano from the one and only Staten Island. Yeah, Alejandro's like hopefully the allergies improve. So usually I tend to get allergies around the same time every year, right around September. Hey, Ron 2000 says hello from Virginia. Good to see you, Ron 2000. June is here, says hey Tom. Natalie says your voice still sounds good. I appreciate that. I appreciate that. Yeah, I do have the water out tonight, so I'm going to be drinking more water than usual, but yeah, usually I have a rough go about it for the first 2 weeks of September, and then we are back in action. Yeah, so Vinny Castellano says it's ragweed season. Ragweed is absolutely horrible, and I do not do well with ragweed at all. Dee says, hey Tom, I heard local honey will help you with your allergies. We'll have to try it out. Appreciate the tip there. Photos from around New York says hola and welcome. Destructionist is here, says hey Tom and friends. Oh yeah, that's right, it is Labor Day weekend, so happy Labor Day weekend to everybody. This is what they call it, the last sort of hoorah for the summer. Now I find the timing very, let's just say, coincidental. Okay, so we've been getting some news out of the large investment banks. To say it by name, we'll just say Goldman Sachs, right? So Goldman Sachs came out and announced that COVID-19 is no longer an excuse to work remotely, or even, for that matter, have a hybrid work situation. For the record, everybody, this place across the street, it's called Dim Sum Sam, and it is fantastic. I went here for lunch today. It is on East 23rd Street, right near Madison Square Park. So I find it very interesting that Goldman Sachs announces that after the Labor Day weekend, all of their employees will be required to work 100% of the time from the office. So many people agree with this, many people disagree with it. Now, I think overall, you guys know my sort of take on this, is that if you can be just as productive working remote, if your company can get the same amount of productivity out of you, I think working remote is fine. Now, if I had to give a piece of advice for anybody early in their careers, it would be, if you're a first-year analyst, second-year analyst, at a bank, or maybe you work in tech or really anywhere, right? I would suggest that you pretty much go into the office every day. Pretty much go into the office every day. And the reason why I think that is because when you're young, your job is to build a professional network of people that you can rely on and you can trust later in your life. Wow, check out this view of the Empire State Building, everybody. And I think it's going to be very hard for people to do that if you're working from home, right? So if you're a 20-year-old, maybe 21, you're fresh out of college, I think you have the energy and the ambition to go into the office. So I really would advise you to do that. well, let's say if you're in even your early 30s, maybe late 30s, you've built that professional network already. Well, then yeah, and maybe you have kids, or a wife or kids, or a husband and kids, whatever it may be. Then yeah, I would say definitely, work remote. You could do whatever you need. But I would be very, very cautious if you're very early on in your career working remote or giving any pushback from going into the office. Now, again, I could be wrong, but that's just sort of my 2 cents. So the news on Wall Street is Goldman Sachs will be requiring all of their employees to return to the office after Labor Day. Now, Labor Day is usually, the last hurrah of summer when all the, major bankers on Wall Street and even some of the hedge fund guys return from the Hamptons back into the city, back into the office. And this is actually when we see volumes starting to pick up here. So I think it was very interesting and very telling that Goldman Sachs would wait till after Labor Day to make that announcement. Another beautiful view of the Empire here. Hey, SME Media says, hey Tom, does Goldman Sachs believe that employees are more productive in the office? Well, Goldman Sachs and many of the investment banks, especially if you work in investment banking and working on like big M&A deals, they think it's very hard to create a sustainable culture remotely, which I think I tend to agree, assuming if you are in a customer-facing position. So, like, look, if you're a software engineer or something like that, or maybe you work in back office at one of the big banks, then yeah, maybe working remote would be appropriate. But if your job is to go out there, raise money, get deals done, bring in revenue for the bank, I don't know. I mean, maybe it's just me, but I find it very, very difficult to believe that you can do that successfully while working remote. Now, maybe you can. Maybe these people are more talented than I am, but I mean, I've been in tech sales for 7 years, and even though I could close deals over Zoom, I mean, as you get into larger deals, right, selling into enterprise customers, so like Fortune 500 customers, I can't close deals over the phone. I need to, go out and see them. I need to take them out to, dinner, on the golf course, tour their facilities. I don't know. I mean, that's just sort of my take on it. So maybe Goldman Sachs thinks the same as I do. It's very hard to develop a company culture if it's 100% remote, but I don't know. What do you guys think? Hey, Maria's here, says hello, Tom, from Sao Paulo, Brazil. Welcome. Roy S. says, Tom, I am always productive at the office, although my boss caught me watching this channel all the time. That's hilarious, dude. Oh my God. Yeah, don't let your boss catch you watching Walks on Wall Street. I am not liable for any termination. Oh man. Mike C says, hey Tom, one buddy of mine, his company went no office. They leased a place for meeting a few generic workstations. Oh, for meeting a few generic workstations. Everybody else had to work from home. Yeah, so Mike C, I think, and we sort of discussed this a little bit last night. 2 nights ago, apologize. I think that COVID inadvertently was the best thing that could have ever happened to co-working companies like WeWork and things like that. Because essentially what COVID did is prove to everybody that you could be just as productive, build a team while working remote. So if I'm a startup, right, or even if I'm a well-established tech company, why would I sign a 36-month lease or even longer when nobody's going to utilize the space? Why wouldn't I go to a WeWork and say, hey, my company is going to have a, bi-monthly all-hands call where we'll utilize the WeWork office 3 or 4 times a month, right? Everybody goes to the office 3 or 4 times a month just to regroup. I think companies are going to, shift towards that sort of model. A little bit of anecdotal data here. You guys know I utilize WeWork. I believe it's $300 for the month, and you have access to any of the WeWork locations across the United States. I think it may be across the world too. Don't quote me on that. Maybe that's a little bit more expensive, but I think it's $2.99. I pay about $2.99, and I am allowed access to any of the co-working spaces anywhere in the United States. So I think that, let's say if I'm a startup, right, and I'm hiring 25 employees all across the United States, well, I would just give them a stipend for $300 a month and say, go work wherever you want. You know, maybe once or twice a month, we could all get together at one specific WeWork. You know, think about how much money that's going to save you, as opposed to slamming down a crazy amount of money, you know, on traditional office space. I don't know. Hey Lee, what's up? Lee says work from home should not get the same benefits as those who go into the office. Well, I think Meta tried to do that, right? Didn't Meta specifically tell all of their employees that if you choose to work outside of the Valley or Silicon Valley, you're going to get a cost of living adjustment, which I think is fair, right? I mean, let's say if you know, are a senior software engineer or you're a product manager at Meta, and you say, okay, well, due to COVID, I'm just going to pick up and leave and move my family to, you know, North Dakota. I'm just making something up. You know, where the cost of living is half. Well, should that person be making the same amount as somebody living in Silicon Valley? I don't know. But then again, I mean, they're doing the same work. Yeah, I mean, I don't know. It could get very, very interesting. GX72 says, hey, hello, howdy, Tom. Good to see you. Welcome. The LT Prod is here. SME Media says, the walks on Wall Street is so educational, your boss might approve. Yeah, maybe. We'll see. Hey, Susanna Herbert says, Tom, I agree with you with what you said about the office. It will be good if you get extra pay for commuting and formal attire. Yeah, I think companies are going to have, it's going to be a very rocky year ahead. Because the only time you're going to know or notice your employees' reactions is if you make a change. So a lot of the articles that came out, I think a lot of them were maybe a little bit extended in terms of embellishing the potential ramifications of Goldman Sachs making their employees return to the office, which I get, right? Because they want to, you know, drive clicks to the New York Post article. But the reality is, everybody, if, you know, I could just level set, and you guys let me know if I'm wrong. At the end of the day, a big firm like Goldman Sachs has so many people, you know, lined up to join that particular firm that even if they see a 10% increase in attrition, they're going to be able to fill those voids in maybe about a month. And if you don't believe me, if you go on LinkedIn and you type in, you know, entry-level analysts or sales and trading analysts, M&A analysts at Goldman Sachs, or in really any department, if you look at the top right-hand corner of that particular web page as it relates to the job posting, they all say over 200 applicants. And the job was posted like a week ago, right? A very select amount of firms, probably like the big four, you know, a lot of the investment banks sort of drive that amount of volume. So, I mean, even if they see a 10% uptick in churn, I think they're going to be able to fill those seats pretty easily. But maybe I'm wrong. Who knows? Hey, Otto is here. Says, hey, Tom and everybody. Good to see you, Otto. Chris says, cost of living should be in line item on the paycheck, just like second shift pay, etc. Says Chris. That's a good idea. Sour Patch Kids says, hey, Tom, let's go cruise around. Good to see you. Vinny Castellano says, Tom, thinking back, what has been your face-ripping business headliner so far in 2022? Face-ripping business headliner? I'll have to think about that, Vinny Castellano. I'm going to have to think about that. Mike C says, I would really miss office face-to-face chats and hangouts. I think that's one of the things I miss the most. And I think that's probably just because, being a salesperson, and many people who watch this stream are in tech sales or some form of sales. And my experience is not going to be the same for everybody's, but when we went to 100% work remote, it was fun for maybe about 2 months. For me personally, it was fun for like 2 months. But then it was so daunting just sitting in my apartment. But maybe that's just the personality of a salesperson, right? You want to go out and see clients. You want to go out and, meet customers. We used to take customers out to, Yankee games and stuff like that, out golfing. And, just seeing your clients in front of a Zoom screen, it just gets old after a while. And again, maybe that's just my personality, but I think it's not for everybody, the work from home stuff. The LT prods is in 2016, some corporations claimed 500 to 1,000 applicants for the same job opening. My God. Yeah, so the LT prod, here's another thing, right? I think this is one of the things that I think came off as a little bit disingenuous out of that New York Post article as it related to, Goldman Sachs seeing a lot of people quitting based upon the announcement that Goldman Sachs is going to bring everybody back into the office. Usually around this time anyway, because I have some friends who work in banking, and usually around this time, let's say if you spend 2 years as an analyst, a lot of times you'll look for exit opportunities, right? So maybe you want to, maybe you don't want to stay in investment banking. Maybe you want to work in venture capital or at a private equity fund or something like that. Or maybe you want to change careers altogether and work in tech. I don't know. It just really just depends on your preference. There's usually a normal pickup in attrition right around this time of year anyway, for second year analysts being recruited away to go work in VC or private equity. So, at the end of the day, I think it's a good news headline, right? Like, oh my gosh, everybody at Goldman Sachs wants to quit because they're forced to be back into the office. But if you think about the psychology of it, at the end of the day, it's probably going to suck for like 2 weeks. You're not going to want to wake up early. You're like, oh my gosh, I'm used to waking up 5 minutes before the conference call because I could just throw on a shirt and I'm taking the Zoom meeting in my pajamas. But you're going to get used to it, right? Humans are creatures of habit, so I think you're going to get used to going back to the office just like you were used to adjusting to working remote. And look, let's say if it doesn't work out and Goldman Sachs really faces huge attrition, well, I think they're smart enough to adapt and listen to their employees and say, okay, let's go back to a hybrid environment. So I don't think this is the end. I don't think it's, as doom and gloom as a lot of the articles are making out to seem. Hey, the LT prods is Barron's covered. The labor shortage will get worse and may last for decades, is the LT prod. So we'll talk about that a little bit tonight because we did get the non-farm payrolls out today. Hey, Miguel is here. Says, good night. Something I'm surprised as a tourist is why stores closed early in the summer. Interesting. Yeah, usually everything around here, closes at like 9 o'clock. However, the Whole Foods, I think, are open till 11. Dr. Longus says, Tom, do you think a face-to-face is a must for sales? So I'm going to give you an answer that you're probably not going to like, but I'm going to explain myself. Yes and no. So if somebody came up to me and said, hey, if you want to be a salesperson, is it possible to do it over the phone? My answer is yes and no. And that's because it varies. You could be selling t-shirts online, or you could be selling enterprise software, right? So I think it really just it depends on what you're selling. I think the more transactional the sale is, the more doable it is to sell 100% remote. Does that make sense? I think as a sales org, let's say if you're a big technology company, I think it's more realistic for you to have your small to medium-sized business sellers or SMB account executives working remotely than it would be to have your enterprise account executives or strategic account executives working remotely. And from being on an enterprise sales team, it's a more collaborative approach, right? Because I'll actually give you a good example. What I'm sort of dealing with right now is as you start to move up the ranks and sell into the enterprise, what you'll notice right around this time of year, September, usually late September to mid-October, is when a lot of these larger companies start their budgets for next year. So what I've been doing a lot is I've been on calls sort of strategizing ways we could get proposals in front of customers now because we want to get in their budget, right? So if you are working at a big Fortune 500 company or a Global 2000 company, and let's say if you're in procurement or something like that, or you're in IT, anything that you think you need, you're probably submitting budget proposals right now. So as a salesperson, what you want to do is you want to be getting in front or getting extreme face time in front of a lot of your prospects to give them an idea about their technology goals, or maybe they're interested in changing a CRM, maybe they're interested in adding, new tablets for the year, or it could be whatever, right? Maybe they want a new MDM software across their suite of employees. You sort of need to get in front of them so they could budget you in for next year, right? And budgets start now. So as an enterprise seller, let's say if we sell through channel partners, we'll be on calls with some channel managers of other companies saying, hey, this is the solution that we're proposing, or we want to propose to our customer. We know they're doing the budget for next year. Can you give us some ballpark ranges of about what your particular product would be for 20,000 licenses of this software? So I think it'd be very cumbersome and hard to do that remotely, right? I think if you're just selling somebody at a one-call close as an SMB seller, then yeah, sure, you work remote all you want, but as you go up into the enterprise or strategic, I think it's difficult. I think it would be difficult, but hey, sweet country living in Michigan says, hey Tom, what camera are you using? So we are using the iPhone 13 mini. The iPhone 13 mini. Now, I've been getting a lot of emails if I'm going to be getting the iPhone 14. I will not. Usually I have phones for years. I think if you guys remember correctly, we used to stream on an iPhone 11. The only reason why I upgraded is because I dropped my phone, and the only thing that broke when I dropped the phone was the camera. So that's the only reason why I upgraded to this one. Hey, Paul says, Tom, Staten Island Ferry on Sunday. Yes. So we will be doing the Staten Island Ferry on Sunday, assuming that the schedule is back to normal. Now, if you remember last time, I think this was about 3 weeks ago now. Crazy how time flies. We did try to do the Staten Island Ferry stream, but it got delayed like 2 hours, and I just had to go home. I couldn't do it. Dr. Longus says, that makes perfect sense. I see exactly what you mean. Yeah, if you're doing a one-call close to like a small HVAC company, because I did SMB sales, right? Sometimes you would call, a small electrical contractor in your community or a small accounting firm or something like that. You could literally one-call close these people. But if, we're proposing, like right now I'm working on a big router deal. So it's this big healthcare company that owns hospitals, they own assisted living facilities and nursing homes. We're proposing a mixture of Cradlepoint, Teltonica, and in-hand routers with 5G capability to all of their sites for wireless failover. And they're interested, but they need to put it in the budget for next year. And with everything, with the inflation has been nuts, what we're trying to do is deal register these deals. So if we can go to the OEM and say, hey, we have an order for you for about 1,000 Cradlepoint routers, we're going to deal reg this, which is essentially giving them like essentially giving Cradlepoint the okay that they can pretty much expect an order for 1,000 units from me at some point. They'll give it to us at a very big discount if we could deal reg that deal. But with inflation, these things have been going up like every 3 months. So it's important that we need to get the proposals in front of the customers, get the POs from the customers so they could build it into their budgets for next year. And hopefully come Q1 we can close some deals. Anyway. Hey, 2 Barnacles. Just had the best cafe latte, extra shot of espresso. Fantastic, love that. So I've never been to this spot, but it always looks really nice outside. Hey, Lil Yells is enjoying some tea and watching the rain before heading out for a workout. New York City and finances is the perfect complement. Thank you so much, Lil Yell. So I have a question for you guys. And again, I want to forewarn everybody that this is anecdotal data, but I think it's very important to talk about it now, especially that we got the non-farm payroll numbers out. I think the biggest thing was not the actual headline number, which was about 315,000 jobs added to the economy. Economists on Wall Street were expecting about 270,000 jobs. So it wasn't that massive beat like we saw last month when economists expected, I think, 250,000 jobs, and we blew the face off of that, came in at about 529,000. So we're seeing a little bit of deceleration, but here's the thing we need to be paying attention to, and that's the labor force participation rate. It actually ticked up a little bit, which is good, So here's the point I'm trying to get at. I'll just cut right to the chase. Have you guys been noticing, either on your LinkedIn professional networks or maybe just from people that you've been talking to, maybe they're your friends, family, of an increased amount of layoffs that is quite noticeable? So here's what I mean by that. We'll cross the street here, make our way to Washington Square Park. So very seldom will I check in on LinkedIn, but usually I spend about 15 minutes a day on LinkedIn just to briefly scroll through what's going on. And now, over the past, I would say 3 to 4 days, there was an unreal, and I'm being serious, an unbelievable amount of people that were posting after 5 years of being employed at Okta, or after 5 years of being employed at Meta, or after 5 years of being employed at T-Mobile, or 20 years being employed at T-Mobile. I regretfully have to announce that I am laid off and I am looking for work. And usually I'll see some stuff like that on my timeline, maybe 1 or 2 posts, but this has just been a wave, like a tidal wave of posts. Now, again, this is anecdotal because this is just me, but I wanted to bring this up on the stream because I wanted to ask you guys, are you seeing anything similar? Because I'm getting slammed with those type of posts. Now, I do want to say horrible, right? I'm not trying to bring this up to say, oh, these people are getting laid off and, sort of make a joke out of it. I'm not. It's horrible. And if there's anything I could do to help anybody in this community that's been laid off, let me know if you work in tech or in engineering or anything. But it's been too much almost, where it's very noticeable. So Paul says, no, not for me, but layoffs will happen in January. So you think more people in January? Okay. Jones is interesting. Dusty says, I have not noticed that, but it's not on my LinkedIn radar. I could add it. Lil Yell says, I did a few weeks ago, mainly in CX and recruiters at tech firms. Yes, I've noticed that too. So a lot of the job losses that I've noticed at Okta particularly, they've all been like talent recruiters. And I guess that makes sense, right? If you're going into an economic downturn, well, alleged. I gotta get some water. If you're going into an economic downturn, which I believe we're already in a recession, right? We've had 2 negative quarters of GDP growth. You're not going to be hiring as many people, so you don't need as many recruiters, right? Alejandro says, Tom, Credit Suisse, SoftBank, reportedly planning layoffs. Here are the major job cuts amid growing recessions. Yeah, so Alejandro, I actually have a buddy at SoftBank whisper something in my ear last week that they're going to lay off about 20% of their employees in the Vision Fund. We talk about the Vision Fund all the time. But really, Credit Suisse? Thank you for that insight. Otto says, I check my LinkedIn regularly, but I have not seen it like that. So Otto, if you don't mind us asking, what line of work are you in again? I forget. Maybe I'm seeing it because the majority of my LinkedIn network is like tech people, and a lot of these tech startups in particular have been shedding a ton of people. Okta's particular cybersecurity company we actually talked about 2 days ago. They reported earnings. I think they laid off about 10% of their workforce. But the good news is, so far, and again, I say this with caution, so far it seems as if the people who are getting laid off are not having that difficult of a time getting new job opportunities, which is good. Now, that could change quite rapidly, and I think we're starting to see that change because the labor force participation rate is ticking up. I think about 718,000 people have now re-entered into the workforce, so that's going to make it a little bit easier for corporations to hire, and that's exactly what the Federal Reserve is looking for, right? Okay, Otto says, yes, I'm a software developer, copy that. Yeah, so probably not a lot of layoffs there, right? I think there's actually a shortage of software developers, but as we were talking about a couple streams ago, I think the majority of the layoffs will probably be recruiters, maybe like customer service or customer relations people, things like that, potentially. But as the labor force participation rate ticks up, this is actually what the Fed wants to see, right? Because if we know that the goal, oh my God. If we know that the goal of the Fed is to kill off inflation at all costs, now one of the contributing factors to inflation has been wage pressures. Okay, now why do we think we've been seeing wage pressures? Well, the reason why we've been seeing wage pressures is because the labor force participation rate is near record lows. And if we keep looking at payrolls, last month we had about 529,000 in the non-farm payrolls. This month we had about 315,000. So as the economy is churning out jobs and increasing the amount of people they hire, well, if you hire people from a reduced talent pool, well, the employees have the bargaining power. So let's say if you get an offer for $100,000 basic salary and you're interviewing with 3 people and they're all hungry to hire you, well, now you can negotiate. You could say, I don't think so. I think, I really want to work for your company, but I'm going to need $115,000 salary or something like that, right? So as that labor force participation rate churns up, that's actually a positive. Well, the Fed would look at that as a positive because that would mean that it's a lot easier for employers to hiring from a larger talent pool, thus not putting as much pressure on wages to the upside. Lil Yell says, Tom, brother, you sound a bit tired, but sharp nonetheless. Yeah, so I'm having a little bit of an allergy fit, to be quite honest. Usually the first two weeks of September, I get crushed with allergies. So yes, I am getting a little bit of an allergy fit today. Hey, TMB says, good evening. Is now a good time to take on debt and buy vacant land? Take on debt and buy vacant land. Interesting, very specific comment. I think it depends on I think it just depends on who you are, right? Generally speaking, I'd say no. Elliot Wave says, Tom, did you know Tesla is opening a gigafactory in Quebec? I did not know that. That's actually really intriguing. I did not know that. That's fantastic. Wow, check out the top of the World Trade Center. The Mighty Bull, what's up? This is good evening, Tom. I hope you feel better. I have allergies too. Well, I hope you feel better as well, the Mighty Bull. KBL says, do you play any games? I don't. I'm not a big video game person, but in terms of sports, I play soccer here from time to time. Kathy Lyon says, hey, good evening, Tom, and hey, everybody. Good to see you, Kathy. Welcome. Taxi Cab says, hey, Tom, what's your take on the uptick in people joining unions? I think that's a very good question. So, I think this was 2 weeks ago now. The cover story of Investors Business Daily highlighted this exact thing that Taxi Cab is talking about, the uptick in union employees or people wanting to form labor unions and the like. And I think this fits very well into my overall thesis of the creation of a two-tier society. Now, I know whenever I talk about this, some people will email me on the side and say, you're a conspiracy theorist and all this stuff, but if you really think about it, right, going back to, the great financial crisis of 2008, and as we've emerged out of that from about 2008 to 2013, well, if you look at the broad range of the recovery, it's been a very, very lopsided recovery, right? So you've seen very wealthy people become extremely, extremely wealthier, and the lower class and the middle class hasn't really been seeing any of those gains, right? It's been a very, very lopsided recovery. So as you start to see that, right, and I guess we'll take a step back and explain why that's happened. Well, in order to quote unquote pull us out of the recession, there needed to be extreme accommodation in terms of monetary and fiscal policy. So the Federal Reserve has kept interest rates artificially low, near zero, for an extreme prolonged period of time, for almost over a decade now. Oh, look at the dog. And in addition to that, they have gone on a bond buying binge of mortgage-backed securities and U.S. Treasuries. So what this does is it allows very advanced investors access to extreme amounts of liquidity or access to capital at very, very low rates. So sophisticated investors can borrow money to invest, borrow money to buy businesses, borrow money to buy real estate, in which case, as the Fed leaves monetary policy low or loose, the assets that they're buying are being inflated, thus making them richer. But if you look at the data, very seldom there's noticing a trend that upward mobility in the United States isn't as easy as it used to be. And I think people are getting sick of it because they're seeing the wealth run away to the top 1%, and they're seeing their working conditions deteriorate, and they're seeing a lot of the high-paying jobs where you could just work remote, and I think that's creating a lot of animosity amongst people. So in turn, what you see is a huge labor union movement because people sort of get sick of it. And I think that trend is going to continue. And we've been speaking about this for quite some time now. And I think, generally speaking, that the Federal Reserve, and I'm not just going to dump on Fed Chair Jerome Powell, right? I'm not just going to dump on the Fed specifically. It's fiscal policy too. But it seems as they've stacked the deck to make the game, or the money game, very easy for very wealthy people to get ridiculously more wealthy, and to make class mobility very difficult for the people in the lower to middle class. And that's sort of my thesis about why you're seeing this massive, labor union movement. But What do you guys think about that? Let me know what you think about that. Hey, Colleen T is here. Good to see you, Colleen T. Tom G is here. Hey, David Individual. This is private sector unions almost always leave a path of destruction. They destroyed Detroit, Flint, Chicago, St. Louis, Allentown, Pittsburgh, and so on. David, what's up? Good to see you, my friend. So we are now sort of NYU's little college town here. It's a beautiful night. Sally is here, welcome. David says capital is not a zero-sum game. Someone becoming wealthy does not make someone else poor or limit upward mobility. Yeah, I think that's a good point. I do agree and I do see your point. Here, let's try to cross the street. What I'm saying though, David, is that, and I think, instead of me explaining it, there's actually a really, really good interview with one of the greatest investors of all time. His name is Stanley Druckenmiller. And he sort of outlines the same exact thing, right? That the game has sort of changed in favor to people that know how to play it. So if you're a sophisticated, let's say an investor or something like that, and you have access to a lot of money, like a lot of the hedge funds, private equity, venture capital firms do, it's very easy to play this game when interest rates and monetary policy is super easy, right? So if you type !Druck, D-R-U-C-K, I think that'll bring you to the link of the Stanley Druckenmiller interview. But essentially what he said is, look, in 2020, 2021, he's like, me and all of my rich friends had the best year we've ever had in our lives. And you can't say the same thing about regular working class people. So I don't know, I think I understand where the Fed's coming from, where they say their job is to make sure we have full employment and things like that. But if you don't let interest rates normalize, you're only stacking the deck to one side of the playing field here. But that's sort of my take on it. Hey, Bagels and Walks is here. What's up? Good to see you. War Walker's like, you sound even better stuffed up. Funny. Hey, Gene says hello from Quebec. Good to see you, Gene. So this is Sullivan Street, everybody. We're gonna walk down one more avenue and then we're gonna head downtown. You'll be able to see the World Trade Center all lit up. Hey, Al J is here. Says, hey, Tom and everybody. What's up, Al J? Mike C says, Bleecker Street is hopping. The LT Prod says, Tom, what do you think the chances are that T-Mobile will do a massive buyback? Well, so speaking of T-Mobile, they actually just announced a massive layoff. So a couple, I think like 15 or 20 minutes ago on the stream, we were talking about how I've been noticing a huge uptick on my LinkedIn network of people unfortunately getting laid off. And T-Mobile was one of those particular companies that just announced a pretty big one. So here, let's sort of unpack that a little bit. This is one of the reasons why I think T-Mobile is doing a layoff right now, because as they've done their merger, or it was really an acquisition of Sprint, they promised the FCC that they wouldn't do any job cuts or layoffs for, I think it was 18 months. Now, 18 months ended 2 months ago, right, since the acquisition. So I think there's going to be huge downsizing of particular departments where there's a lot of duplicity. So I think you're going to see that, which doesn't necessarily mean T-Mobile is laying off people because there's an economic downturn, just because they were going to lay off those people anyway. But in order to get the merger done, they had to promise the government that they wouldn't lay off people for 18 months. So 18 months is up, and I think you're going to see an uptick in layoffs. Hey, Derek is here. Says good evening. Welcome, Derek. A lot of people eating outside tonight. Al J, welcome. Good to see you. I think a lot of these outdoor dining places here look rather unique. You know, the city has since said that they want to take them all down, but some of them look nice. These ones look really, really nice out here. Hey, Ren 10 says, Tom, how's the weather? Weather's very good, not humid at all. Very, very good. Abdullah is here. Welcome, Abdullah. Dr. Longest says, I think you're right on target. I never thought unions would make a comeback, says Dr. Longest. Hey, Gregory's here. Says hello all. What's up, Gregory? Good to see you, my friend. So, Gregory, we are near New York University tonight, but we're actually going to be heading back uptown in a little bit. Very lively night, very lively Friday night here. Hey, Derek says, thanks for having me. Thank you so much for being here. Wendy England, the one and only, is here. Good to see you, Wendy. Abdullah Muhammad is here. Yes, Lil Yell says Adam Newman is a charisma maxed. I know, dude. Yeah, Colleen T says yes, city is inspecting the temp structures more. Hey, JP says happy Friday, good to see you. So photos from around New York is like, is this a third leg down in the market? I think all odds point now to where we're going to get a third leg down, unfortunately. But that's where I think we're headed. So I posted a chart on Twitter. Now, if you guys want to follow me on Twitter, you could follow @WalksWallStreet. A lot of the times I'll post different charts and things like that. Oh, check out this flag. Love that flag. I like this one a little bit more though, this one right here. But both are beautiful, both are fantastic. I posted a chart on Twitter and it looks like the market, and when I say the market, I mean the broader indices, right? So the S&P 500, the Dow Jones Industrial Average, and the NASDAQ, it looks like they are probably gonna make a third leg down, which is almost too perfect and too good to be true, right? Because usually, if you look at a seasonality of a bear market, many bear markets actually end towards the latter half of the year, right? So if we can get a big flush, a big push down into late October, early November, that may just set us up for a Santa Claus rally situation. And in that case, if we really do get a third leg down in the indices in the market, that's going to cause a ridiculous amount of demand destruction. Right, and there's been a particular fund manager who's been talking about this more than anybody, and that is Dan Tapiero. And Dan Tapiero is a very, very well-respected fund manager on Wall Street. He actually got his start by working with Stanley Druckenmiller. And he says that the Fed is a little bit ahead of themselves in causing too much demand destruction, which I think is actually needed, right? I don't think that the Fed's job is to be a cheerleader of the stock market. The Fed's job is to make price stability and control inflation and bring inflation back down to their 2-year target. And anyway, I think if we get that third leg down, I think that's going to cause a massive wave of layoffs. I think you're going to see the unemployment rate spike. And I think that's going to send the signal to the Fed that, okay, things have calmed down, we've done enough damage, let's hold interest rates where they are, and maybe we'll just start buying some bonds again to stabilize things, and that will have completely flushed out all the irrational exuberance in the market. Because, you know, I wrote about this in the last Behind the Street newsletter, that one of the things that concerned me about 2 months ago, even though the market was selling off, there was actually a record amount of fund flows into very speculative ETFs like the ARK ETF from Cathie Wood. Now, the good news, I have an update for you all. Here's some good news. This week, because I always watch these particular fund flows, this week the ARK Innovation ETF saw the highest amount of redemptions in its history. And what that means is people selling ARK and taking their money out. And that usually signals a little bit of a trend change in the market. So that's some good news. a lot of those Redditors are sort of throwing in the towel, so to speak. Austin City Limits, says Tom. Looks like the Santa Claus rally is the only thing we'll have to look forward to. Yeah. We'll see. You know what I got to do? I forgot. So if you guys remember, last year, right around Christmas, I did our stream poll about where we thought the S&P was going to end. I got to go back to that stream and look what everybody said, because I think we're all way off, to be honest. I think there was maybe a couple of you that are probably going to hit it right on the money, but I think I did that on the Christmas Eve stream or the New Year's Eve stream. I had everybody post where they think we're going to end up for the year. But I think I know I'm way off now. But look, things can change. Who knows? Things can change. Hey, JT. Says, love these videos, Tom. Watching from England. Hey, that's awesome, dude. Could you feature some old Mafia landmarks sometimes? Like Spark Steakhouse. Yes. So I think Spark Steakhouse is Midtown East. So next time we're going up near Grand Central Station, we'll absolutely do that. 100%. Good to see all of our viewers from England. Welcome, everybody. Obvious Artist says, wow, capitulation starting for equities then, referring to ARK. Yeah, so that's exactly what I look for. And I know I haven't put out a newsletter in a while. It's just been crazy busy with work, but the last one I put out probably 2 months ago now. And that's when the market was selling off like crazy. And I'm like, look, the only reason why I don't think the bottom may be in is because, number one, we don't see the put to call ratio going to Mars. And we still have these buy the dippers buying all these unprofitable companies. But ARK's redemptions were at all-time record highs today, or this week. So this is Sullivan Street here, everybody. I believe this is Sullivan and Prince Street in Manhattan. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and subscribe if you are new. Hey, Billy is here. Good to see you, Billy. Welcome. Colleen T. Western Mass Dave. Good to see you, Dave. So I guess I'll ask you guys, right? We'll take a little bit of a poll in the chat. Do you think that we're going to get a third leg down? And so this is what I mean by a third leg down. Do you think the S&P is going to undercut the low that we made in early June? Do you think we're going to slice below that? Or do you think we're going to put in a lower high and then continue upward? If I had to be a betting person, I think we're going to either just test it or just undercut it. And if that happens, I think that's going to open up some ridiculous opportunities for us, like ridiculous. Hey, Brian, what's up, dude? Says, just wanted to check in and say hi since I'm currently on vacation. Love that, Brian. Where you, I think you may have told us where you went on vacation, but where you headed on vacation now? Hopefully New York. Or Florida, something like that. Very lively here for a Friday night. See, I think these outdoor structures are very nice, but some of them are run down, but these are actually quite nice. Hey, Kevin Ramsey is here. Says hello from Cincinnati. Good to see you, Kevin Ramsey. Billy is here. Says I think the sell-off in the midterms and then in the... okay, that's actually a good prediction. So Billy says, I think the sell-off into midterms, and then if the House and Senate flips, the market could be off to the races. Well, historically, you would be 100% correct. That prediction would actually align exactly with what usually happens throughout history. So I think that's what, I was watching CNBC briefly today. They had Tom Lee on, or Thomas Lee, the founder of Fundstrat. I respect Tom Lee a lot. I think he's a smart guy. I listen to him. He sort of says the same thing. Sort of says the same thing. David says, Tom, are they still doing the vaccine passport for indoor dining? They are not. They are not. I think they did away with that quite some time ago, actually. Joan is here, photos from around New York. Welcome. Yeah, GX72s, like, you should leave them up if they're being used. The ones in the East Village, I think those ones got to come down, to be honest. Those ones are no good. You're going to see a beautiful view of the World Trade Center here. Just wait till you see it. Check that out. That is a money shot right there, one of my favorite buildings. Dr. Longus's third leg down seems inevitable. Yeah, I mean, the main thing, the reason why I'm not saying that the market is bottomed yet is because in every single bear market throughout history, everyone, without exception, what we see at a bottom is massive capitulation where the VIX goes to Mars or goes to Pluto, right? The VIX will usually get up to about 70 or 80. And the put to call ratio will always spike ridiculously as well. And essentially the put to call ratio is just the amount of people betting that the market is going to go down, or buying insurance, as I like to call it, as opposed to people betting that the market is going to go up. Sunshine after rain says iced coffee sounds good right now. Agreed. Check out this place. There's always interesting places here. Huge space, nearly nothing in it. It's an art gallery, though. You know, if you venture a little bit further uptown, there's an art gallery that is only NFTs. Has anybody passed by that art gallery? It's actually interesting. I was actually thinking about shooting a standalone video there. It's actually near my old office. Oh, JP, this one is art galleries for NFTs? Well, there's a huge one, I believe 45th Street and 5th. A massive one. It's actually really cool. We'll have to check it out one day. Dan Zhang says, have you ever bought any NFTs? I have not. I have not. I have not personally, no. What about you guys? I think a lot of the, I think you guys already know my take on NFTs. I think that 99% of it is nonsense, pure sheer nonsense. However, because I know a lot of you flame me in the email box, which is fine. We could have a difference of opinion, and maybe I'm wrong, right? I could be wrong. But I think as the years go on, you're going to start to see real use cases for them come about. But I'll give you guys a little tip, okay? Anytime you see a celebrity backing any type of investment vehicle or an NFT, you can pretty much bet with a 99.999% certainty that it's a scam. Now, I know I probably shouldn't say those things, so I'm just going to say allegedly, allegedly, allegedly. But, you know, I think you guys know what I'm getting at. Mike Skate TV says, I agree, NFTs are a scam. So I don't think NFTs are a scam. I think the vast majority of the way that people have taken advantage of them are a scam. right? The way they have been marketing these NFTs to people is just like really egregious. But usually, look, at any time when you have a new emerging technology, things get ahead of itself. Always, always, always. But look, unfortunately, people, I like to call it, this is sort of what I like to call it, everybody. This is a beautiful restaurant here, by the way. I like to call people are selling people a bag of goods that they know is never going to materialize. And I think that has an ethics issue in play. I think if you know that something that you're hawking is never going to take off, just for the sake that you can make a couple quick bucks off of it, I think that's a little bit of an ethics issue there. But look, I think as the years go on, there's going to be real use cases for these non-fungible tokens. I think you're going to see real artists, right, being able to mint their particular artwork and not just use it as a hack to, fleece people. That I do think is going to happen down the line. Hey, Herbert is here. Thank you so much for the $2 donation, my friend. This is Tom Research. Steven Seagal, great example. I will. Chris, thank you so much Herbert, thank you so much for the donation. Much appreciated, my friend. Thank you, thank you. Vaughn is like, so NFTs are magic beans. Hilarious. Taxi Cab says, I blame Matt Damon for taking on NFTs bro culture. Hey, Tin Man is here. Says, love this route tonight. Good to see you, Tin Man. Yeah, hey, what's up? What's up? Hey, we never really come down here. You're right. Hey, Dan Zhang says, I did invest in a first generation Charizard mint condition card on an app. Yeah, so again, I think that there are going to be real use cases and real sort of projects. But what we saw, during the last cycle, as I like to call it, is you just had a very basic, development team with a lot of money go to a lot of these celebrities, pay them a ridiculous amount of money so they can market it to their fans. And it was nonsense. They're like, oh, this is a very unique first edition mint, this, that. And it's like, come on, man, that's nonsense, dude. So I think this is a rule of thumb for anybody that wants to, I guess, just wisen up a little bit. Anytime you see celebrity involvement with nearly anything, you could pretty much just stay away from it and just completely disregard it. Hey, Two Barnacles. Good to see you. Hey, Mandy is here. There's just so much trash on the street. Yeah.
I'm like not really there.
Unfortunately, there is in New York.
No matter what, so I'm like, why?
Western Mass Dave, we are in Soho tonight, walking around. Dan Zhang, yeah, I think a lot of those celebrities got into a lot of hot water. And I predicted this a year ago. For those of you watching on the streams, I said, look, all of these, like the Kardashians and promoting all this stuff, it's going to come to a head, and quite abruptly, for that matter. Hey, Elliott Wave Review is here. Good to see you, Elliott Wave Review. Says Tom, what do you think truly happened to John McAfee? I don't know. Honestly, I really don't know. He's crazy, that guy. He was definitely a crazy one. But at the end of the day, I don't know. I really don't know. What do you think? BP says, looks like most hedge funds are watching live U.S. sports. Yeah, so could anybody key me in on that? What is going on with the U.S. Open? I think Serena Williams. She's retiring, correct? Gene says, Tom, what is your take on reverse mortgages? I would broadly, generally stay away from them. It's definitely a good way to get yourself into a lot of trouble quickly. Colin T says, Serena down 4-1 in the third. Dang. You know, I wish I could have gone to that, honestly. She's fantastic. I honestly, like people like that, athletes like that, I honestly don't even know how they do it. And I think she runs her own venture firm too. I think she runs her own VC or private equity firm. So she's one of the greatest athletes ever. Won however many Grand Slams or whatever they call it. Is a mother and also runs a fund. How do these people have the time to do all this stuff? It's insane, isn't it? Sorry, I'm just drinking some water. I have some allergies tonight, but I always think about that. These people are, it's almost awe-inspiring the amount of energy these people have. It's like, where do they find the time to do all this stuff in one day and be a professional athlete? It's insane. Wow, I didn't know that. Her husband is the founder of Reddit. I didn't know that, Dan. That's insane, dude. So now we are in the heart of Soho. It's one of my favorite places in the city. These buildings are all the original buildings with the very famous scaffolding. Looks very beautiful and unique. Western Mass Dave says, Tom, I say the same thing about you. How do you find the time? Yeah, but I'm not a professional athlete. John G, good to see you. So we're heading northbound, everybody. Gene says, me too. They use celebrities to promote reverse mortgages. Yeah, I just think it's a very easy way to get yourself into a lot of trouble. Zabatata says, I'm sorry, Tom. I know you were sold that image, but the reality is a bit different. Let's say, great at the sport. Huh? Dr. Longus says, I like Tom Selleck, but I'm surprised he endorses reverse mortgages. Well, I mean, he's probably getting paid a ridiculous amount of money to do it, right? I would just be very, very careful with that. I always like to use this sort of turn of phrase. You want to make sure that your house is a blessing and not a curse, right? So when you think about your house, you don't want to get stressed out. But if you think about your house and you're stressed, then that means the house is not a blessing. So I would just get it paid off. If you want to be a real estate, investor and try to make cash flow. Anyway, I think if you want to be a real estate investor and make cash flow out of your properties, then maybe down the line you could do like a cash out refinance and then use the proceeds of that to acquire another property, but only under the condition that the property that you're buying is going to produce a return. Yeah, Fred X says Tom hates loud pipes. That is so true. I do. Well, yeah, I mean, I'm not just saying I'm dumping on celebrities, right, for pitching stuff, because sometimes celebrities, will pitch good products. But I think what I'm trying to get at is this whole NFT thing that happened over the past year. For anybody who has been through a couple market cycles or knows anything about, market psychology, you were like, oh my gosh, this is a big racket. Every single celebrity was pumping this NFT. It's going to be the next big thing. I mean, look, I'll bite my tongue, but I'll bite my tongue on that. Hey, Shadow D250, good to see you. Thank you for being here. Everybody, I forgot to tell everybody, happy Labor Day weekend. I hope you all have a phenomenal, restful weekend with you and your families and friends. This is widely regarded as the last sort of hoorah for summer. And as we were talking about at the beginning of the stream, I find it very telling that Goldman Sachs is now announcing the return of all their investment bankers after the Labor Day weekend. It's back to work, back to reality. Wow, the tour buses are packed. That's a good sign. So I would like to bring about attention to a particular, not really subject, but usually volumes on the major exchanges start to pick up materially here after Labor Day weekend. And if you're asking why, well, I'll tell you. Usually during the summer doldrums, as they call it, a lot of the big bankers or the hedge fund guys, the PMs, they'll be out in the Hamptons, out in Montauk, having a good time. And after Labor Day is when usually everybody comes back and returns to the office. So when that happens, you're going to see a big pickup in volume, okay, as people adjust their portfolios. So expect extreme volatility is my prediction in September. Now, if you look back throughout history will tell you that September is actually the worst month historically for the stock market. And I think that trend is going to continue this September. So just be cognizant of that. But everybody, FredEx specifically, check this out. If you look at this teeny little thing in the distance here, you're going to see the one and only Chrysler building, FredEx. And that is standing on the corner of East Houston Street. It looks beautiful here. But that is the very iconic Chrysler building in New York City. Looks phenomenal. Hey, Autumn Beauty is here. So this time, I'm so sorry to hear that, Autumn. I'm so sorry to hear that. Well, hopefully you'll find some peace with that as the time goes by. Check out these fire escapes here. Some of my favorite. Some of my favorite buildings in general. Looks like there's some sort of a party going on over here. Yo, Jimmy, what's up? Says Tom, any good food carts at this hour? Yes. So Jimmy, I'm gonna let you in on a little secret. If you like halal food, which I think everybody pretty much likes halal food, right? You gotta go to Adele's Famous. Okay, many people will tell you when you come to New York, you gotta go to Halal Guys. Not me. I would skip the Halal Guys and I would go to Adele's Famous. And it's right outside of Radio City Music Hall. And you're gonna love it. It is absolutely fantastic. And it's only like $9, $8 or $9. Yeah, chicken over rice, yeah. Hey, Stephanie Stanley says, Tom, should I put the Max 6K in my IRA in December? I can't, so Stephanie, I'm not legally allowed to answer that. I can't like tell you what to do, but I could tell you what I would do. Yeah, I would max out my retirement accounts, but I can't tell you what you would do. You'd have to speak to an investment advisor, your financial advisor, but just for the legalese of it. I know, photos from around New York is like, but the calories. Photos, how many calories do you think is in one plate of chicken over rice? No, okay, let's say this. One plate of mix over rice from Adele's Famous. What would you guess? What would you guess, photos? Hey, Robbie, good to see you. Happy birthday, my friend. Good to see you, Robbie. Everybody, this is Crosby Street. This is one of my favorite buildings here in the city. Very unique. East Houston and Crosby. $600 calories? Okay. Best Bets TV, good to see you. If I'm gonna guess, I'd say, I'm gonna go high here. I'm gonna say 800. Is that too high? I'm gonna go high. 800. I guess there's no way for us to actually know, but. All right, Lafayette Street. Just trying to cross the street without any problems. JP says $7.50, no sauce. So I get mix over rice, no salad, no sauce. Not a big salad guy, not a big sauce guy. Oh, check out this car here. But this is my favorite building right here. Dan Sang says Audi R8. So Dan seems to be the car guy in the group. How much do you think this costs, Dan, if you had to guess? Wait. Before you give it, I'm gonna guess. 90,000. That's my guess for this car in front of us. Am I right? Am I off? Watch me be way off. That's my guess. $90,000 for the Audi R8. Oh my God, I was way off. James is like 185 grand. Oh my God. Okay, I'm gonna stick to stocks. I'm gonna get out of the car game. If you guys are in the city, this is the best coffee shop, one of them. Ritz won the great. Says 300K with inflation. Dude, get out of here. That's too funny. So once again, everybody, I apologize for my voice. I'm dealing with some allergies here, but. So Dan says brand new after tax should be 200 grand. Oh my God. Jeez, I mean, my gosh. You know, if you have a $200,000 car, I mean, man, you must be worth many, many, many multitudes of that. So this is the Kith store. This is also a very famous place here in NoHo. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually do these live streams about 5 days a week between New York City and Miami. Dang. Jones says, I have allergies too, hope you feel better. Look at these cobblestone streets here. Beautiful, beautiful. The original cobblestone streets in New York. Hey, Shadow says, I just subscribed because this is pretty neat. Well, thank you so much. I appreciate that. Thank you for the support. So everybody, we will quickly cover the non-farm payrolls. So non-farm payrolls came in at about 315,000 for August. That was ahead of the 270,000 that was expected by economists on Wall Street. The labor force participation rate did tick up, and wage pressures actually cooled quite a bit, which is good if you think about what the Federal Reserve wants to look for, or what they want to look for. Because as that labor force participation rate ticks up, that insinuates that employers are having a little bit of an easier time hiring employees. Okay, so as the talent pool expands, so as more people are entering the labor force, there's more people to choose from to hire, in which case the employees have a little less bargaining power to say, oh, I'm interviewing with 3 specific companies, I have an offer at all 3. I'd rather work for your company, but you're going to need to pay me, let's say, $10,000 more, right? That puts upward pressure on wages, and that puts upward pressure on inflation as a whole, which is not good when we're talking about what the Federal Reserve wants to start to see from the CPI. So this is one of my favorite firehouses here. Big shout out to the FDNY. I think the original firehouses look so unique. Check out the architecture on these buildings. Hey Elizabeth, what's up? Says, hey Tom, how are you? Good to see you, Elizabeth. Bill Ryan says, hey Tom, 2 weeks ago I sold all my stocks since I thought it went up too fast recently. Should I have bought QID short QQQ with the proceeds? Well, I can't tell you what to do, but I am expecting a third leg down in the market, I think. And I think if we do get that third leg down, hold on, let me pull over to the side here. I think that's actually going to set us up for quite a normal seasonal recovery. So if you look back throughout history, usually markets tend to bottom late October and rally into the end of the year. And that would also coincide well with midterms, right? So I think if the market if we get another leg down, which I think we will, if midterms come out favorable for the market, which would mean both houses of Congress flip to Republican. Now, I'm not saying that's what I want. I'm just saying from a financial analyst standpoint, if we look back throughout history, that's what the market's like. They like a Democrat as a president, which we have. We have President Joe Biden. And the market tends to perform better when the Republicans control both houses of Congress while there's a Democrat in office. So it's very possible that this could be shaping up for something, or let's say an opportunity that is quite textbook in nature and would be very, very lucrative for investors, potentially going into 2023. Shadow, yes, my name is Tom. So now we are on Bowery, or Great Jones Street. Lots of cool places here. Hey, Charles Collins in action. Says, Tom, it's not that property taxes are too high in Florida. What happens is that a few municipalities include in the bill other items such as school bus, fire department, garbage pickup services. So I've noticed that too. I mean, obviously I just got my property taxes. And, here's what I'll say about that, Charles, and I think you make a good point. Because a lot of we have this sort of like group chat, right? In this app called Signals. I'm not sure if anybody's heard of it. But a lot of my neighbors were complaining about the property taxes, which I get. But for me, I almost felt bad because, coming from Long Island, New York, I'm like, just as long as I don't have a $20,000 property tax bill, I'm happy. Right, and that's a very, very sad reality because, excuse me, I think living in New York, specifically, 5 boroughs, Suffolk County, Nassau County, if you're familiar with that, it conditions you for unrealistic expectations anywhere else in the United States. And I think that's exactly what I have, and I'm sort of bringing that to Florida. To say, oh my gosh, my property taxes are only $5,000, only $6,000, this is a steal. When in reality, I should be like, wow, that's ridiculous. On a piece of property that I own, I have to pay $6,000 a year to the government for something that I own. That's ridiculous. But I get it. I think the point I'm trying to make is that coming from a place where the property taxes are crazy, anything not as crazy as that, I feel like a sigh of relief. Am I making sense, or do I sound crazy here? Yeah, Autumn Beauties is so true. Yeah. Yeah, everybody's like, true. Hey, EBITDA, what's up? This is Walks from Wall Street Tom. Hope you had a nice week. It was so damn busy. Glad we had a long weekend. So EBITDA, I'm actually glad you joined. I have a question for you.
I went in and it was...
Obviously, Goldman Sachs announced the return to the office for all of their employees after Labor Day. Do you think that there's going to be material churn from that, or do you think it's just going to be business as usual, the normal amount of churn that happens? Or what are your thoughts on that specifically? Because my take on it is, there's been a lot of New York Post articles that says there's going to be this huge wave of attrition in banking because many of the investment banks are making their employees return to the office, but I'm not buying it. I mean, if you look at Goldman Sachs' funnel or pipeline of people who want to work there, they're going to easily replace all the people that quit. And usually around this time anyway, you have normal attrition of people going to work for private equity and venture capital firms. So, I don't know, that's sort of my take on it. Hey, Omar is here. This is nice. Good to see you, Omar. Welcome. All right, let's cross the street. This is now by the Cooper Union. So we're about to walk past St. Mark's Place, where St. Mark's Place actually has quite a bit of broken down outdoor dining places. EBITDA, Tom, I think all of the people that were there before work from home will be back. Moynihan has been pushing coming to the office big time, but I could see the Gen Z kids who don't come in get canned. Oh my God. Interesting. So for anybody who doesn't know, Moynihan is the CEO of Bank of America. That's Cooper Union. Yeah, EBITDA, I think it's just going to be, look, people are going to resist it at first, but at the end of the day, humans are creatures of habit, and I think people are going to form the habit of coming back to the office pretty easily. EBITDA says that, or they will not get promotions, and in theory, just cap their growth within the company. If you are needed and not being seen, but MDs, VPs, then there's no chance. Yeah, that's true. Yeah, it's sort of like you're hurting your own career advancement if you don't go in the office. Very true. So here's something quite interesting. Now, I've laid out my thesis for buying land, because I see some comments here about buying land. So my bull thesis is to buy land around the Finger Lakes region in upstate New York. And the reason for this is because we've been seeing a massive drought across the United States. But if you look around like Skinny Atlas Lake, Cayuga Lake, in upstate and central New York, those lakes are some of the cleanest lakes in the world, not only in the United States, but some of the cleanest lakes in the entire world. And also a very fertile farmland too. So if you want to talk about potentially self-sustaining, that's the place to do it. So a little bit of a two cents there. Yeah, so EBITDA says, in the investment banking and asset management industry, face time is essential, especially when just getting started. You need to work with your desk exponentially higher for client-facing roles. Yeah, EBITDA, I think we're aligned there, man. I think me and you are on the same page. What I've been saying is exactly that. Look, I mean, if you're just coming out of university, college, whatever you want to call it, I mean, your main job, right? Think about it from yourself, right? Think about it from a selfish standpoint. Your main job is to build a network of people that can help you out later in life. And how are you going to build relationships when you're a 20-year-old kid hiding behind your computer in Zoom? You got to be in the office, and you got to do what you got to do. I will say, let's say if you're a VP or a managing director or something like that, you've put in the work, you've made your money. Yeah, then you could probably push back and work remote, right? Because you have a book of business and you have a network to help you out and propel you, right? So let's say if you're an MD and you're making $1 million a year, whatever, 900,000 to $1 million, and you're like, you know what? I'm not going back to the office. Who do you think is more replaceable at the investment bank? The managing director, or the analyst? Which one of those employees do you think is more replaceable? The analyst. So it's very possible that maybe there's an MD out there that'll say, nope, not coming back. Well, then the bank is probably going to be able to work with you, right? because you'll probably just go work for a competitor and bring all your business there. But an analyst, if you don't want to come back, okay, hit the bricks. I'll hire 1,000 other people who are clawing their way that want to work in the bank, right? So I think you'll see stuff like that happen too. Hey, Disney cast member, what's up? Good to see you. Yeah, EBITDA says even if they say you can work remote, you should be in the office at least 4 days a week. This does not apply to MDs or VPs. Yeah, well, I mean, take it from EBITDA. He's an investment banker, so take it from him. I agree. Gene says droughts are becoming more and more of an issue. I have a friend moving from Salt Lake City, Utah to Virginia, and one reason is because they are starting to ration water. Yeah, I mean, I think that's going to be an increasingly growing play over the next couple years. Yeah, Gene says your Finger Lakes prediction is becoming reality. I'm telling you guys, and you know, there's only about 750 people watching the stream. That could potentially be like if we look back on this stream 10 years from now, I honestly think, you know, we may be seeing some, you know, documentaries, or, you know, it'll be on like 60 Minutes, how the land values in and around the Finger Lakes are at stratospheric levels. Watch, I think that's probably gonna be my one good prediction. Now, I'm not good at predicting things, right? But I think this is a pretty good trend to follow here. Wow, Mike C. So I saw a YouTube video of how low water in the Great Salt Lake was. Holy moly, yeah. So you know what I did, I was reading about? Supposedly, Florida has the highest concentration of freshwater springs in the entire world. Did anybody know that? I didn't know that until just two days ago. Hey, J22 says, Tom, thank you for the stream. Enjoy the holiday weekend. Hey Jay, you too, my friend. Thank you for that. It is Labor Day weekend, so hope you enjoy as well. Hey, Dolly Girl Twins is in Vegas. We have water police not allowed to water our lawns. Yeah, that's yikes. EBITDA says, Tom, I've actually been in talks with private wealth management about transition over to work with ultra high net worth family people who own a business and plan on exiting for at least 100 million, way better hours and pay. Dude, congratulations on that, EBITDA. More power to you, my friend. Love that. So EBITDA, what do you think about that thesis of buying up land around freshwater lakes that are naturally spring-fed, right? Because a lot of the times, you know, these lakes that will go through droughts, a lot of them aren't spring-fed. And I think all the Finger Lakes have natural spring-fed. What is the word for it? I forget. I'm suffering here a little bit from the allergies, everybody. Yo, it's Sunshine NYC. What's up? Sunshine, good to see you. So Sunshine NYC, you're right on time for the Empire State Building view right here. Yeah, EBITDA, that's true. A lot of the fresh water in Florida gets contaminated by the salt water. That is 100% true. Ah, aquifers, that's right. Thank you for the help. Estelle is here. Good to see you, Estelle. Yeah, the big issue with Florida is that much of the land is all limestone, right? So it's not so much about the sea level rise as the issue. It's about the salt water actually coming up from under the ground. And it could actually contaminate some of the fresh water, which is a huge, huge issue. So you're 100% right on that. Hey, Chuck White is here, says Webster Hall is right around here. I missed that place. Raj says, what time is it? I'm not sure. I think it's like 10:50, maybe 10:50. Hey, Lockjaw, good to see you. Welcome. Hope you're having a good night. Hey, Michael says, good evening from a very dry and hot Southern California. Yeah, Michael, we were just having a conversation about the drought situation and how critical it is. Wow, check out that view of the Empire State Building there. Got a garbage truck coming by. Autumn says, would you move to Michigan? Probably not. I'm not a big, I don't know, probably not. Probably not Michigan, no. Yeah, Disney cast member. That's a good trade. Disney cast member, that's a really good trade you made. Hey, Tara is here, says Florida is man-made. It would not exist without man creating beaches and aqueducts. Yeah, Florida is one of my favorite places on earth, though, to be honest. So is New York City.
Thank you.
So 11? Oh, if you read 11.
So Regal, I think, just filed for bankruptcy. Yeah, EBITDA says parts of Michigan on the water are beautiful in the summer, minus the mosquitoes, but I personally cannot make it to that kind of winter. Dude, EBITDA, same exactly here, dude. I am not a winter guy at all. But northern Michigan is supposedly really beautiful. Yeah, G. Shep says New Hampshire has some really nice spring-fed lakes. And New Hampshire is a fantastic state, too. What is their motto? Live free or die? I could get behind that. But the only thing about that, G. Shep, is just the winters. The winters are brutal. I don't know. I think we as Americans, now I know there's many people that are watching the stream that don't live in the United States, but I think as, you know, the people who do live in the United States who watch this stream, I think we need to be very, very thankful for where we live, right? Because we are positioned in a very unique place geographically where we can pretty much self-sustain, right? You know, we have the Great Lakes, fresh water. We have the most fertile farmland in the world. Now, even though some particular cities in the United States may suffer, America in general has the resources to self-sustain. You can't really say that for other parts of the world. So just by nature, we are extremely lucky, extremely lucky. Hey, Cooking is here. What's up? Just doing anything special on this Friday night? No, just doing the stream, then I'm gonna head home, go to sleep. But what about you? Any plans for the Labor Day weekend, my friend? Wendy England says, I am very thankful I live in Canada. Yeah, Canada, US, pretty much the same thing. You know, I gotta get back to Toronto. That's on my bucket list for 2023. Hopefully we can be doing some streams in Toronto 2023. EBITDA, that's hilarious. Yeah, Heaven's Waiting Room for Florida. So EBITDA, a lot of my healthcare customers, they've been doing a ton of M&A activity in Florida for home healthcare for obvious reasons, right? You know, a lot of retirees in Florida, so huge growing TAM in Southern Florida for home healthcare. Tampa, Florida as well, so on the West Coast too. You're seeing a lot of home healthcare. Disney cast member says, Tom, did you ever go to the movie at Bryant Park? I think I went to one. I think I did go to one. I think we started streaming at the conclusion of that particular movie. Estelle, yeah, that would be awesome, Estelle. I'm down to do that. Last thing I'll say, everybody, is that here's one thing that did concern me a little bit. It's that full-time jobs fell about 242,000, while part-time jobs gained about 413,000. So that's a trend to watch. Okay, this is, now I'm not trying to start doom and gloom, but that's now on my radar. So we'll be discussing that as the months go on, but watch that particular trend. Yeah, Cooking says that is concerning. Well, it may or may not be concerning, and we're going to do a stream on why or why not, but I don't think we need a couple more months data to roll through before I can make a conclusion on that. This is a great Korean barbecue restaurant. EBITDA says, Tom, I know a guy who runs a PE shop that is RE based. He made a killing by buying up, wow, and consolidating a ton of rehabs in Florida, yeah. You know, EBITDA, I also heard that trailer parks or mobile home parks are very, very profitable. I'm looking into that as well. Yeah, Western Mass Dave says, Tom, I saw that Bed Bath & Beyond is closing about 150 stores, slashing about 20% of all workers. Yeah, I mean, Dave, at the beginning of the stream, I was saying my LinkedIn is flooded with people, unfortunately, announcing that they've been laid off. And now usually when I scroll through my LinkedIn feed, you'll see some of that stuff, but this is like really noticeable. Now, more recently in the tech space, T-Mobile has announced some pretty big job cuts. And I think the reason for that is because if you look at the details from the merger, they promised the FCC that they wouldn't lay anybody off for the first 18 months. So what happened 2 months ago? Well, 2 months ago, the 18 months is up. So all of the duplicities, I should say, that is going to get cut. So it's unfortunate, but I think, you're going to see a lot of layoffs here coming out of T-Mobile. Wow, Sunshine After Rain says congrats on 19,000. We really, wow. Oh, crap. Wow. That's insane. Wow. Well, I appreciate it. That is unbelievable. Well, everybody who has watched the streams, subscribed to the channel, I appreciate it. Never in a million years did I think that this thing would grow to 19,000 people. Jeez. Oh, Michael Welch, I just walked past you. I didn't even notice, dude. Michael Welch is the manager of the Whole Foods back there. Mike, I didn't even see you, dude. Should have said what's up. But yeah, guys, this has just been amazing. I think I could say with 100% certainty that this is probably one of the best decisions I've made in my life, is to start this live stream. I've met so many crazy cool people from all over the world. Learned a lot as well. I think we share a lot of good ideas. Very thought-provoking on the stream, regardless of different perspectives. So I want to thank you guys for that. Oh, EBITDA, you were looking into the mobile home parks. Okay. And they're amazing for 1031 exchanges and tax mitigation. You must read them. So EBITDA, I know you're not on Twitter, dude, but I gotta tell you to get on Twitter, man. EBITDA, there's this guy, you'd be surprised. So Twitter, I think, is one of the best social networking platforms for business. Better than LinkedIn, you'd be surprised. Now, there's this particular real estate guy that I follow on Twitter. I forget the Twitter name. I'm gonna have to retweet it on my page. But he goes into all that stuff, and that's sort of where I got the idea to look into mobile home parks. You may even know the guy. You probably even know him. But yeah, I know you're not on Twitter, but if you go to like real estate Twitter, there's some pretty big players on there and a lot of good ideas.
And it's fun when like I get to
EBITDA says, Tom, Delaware statutory, please do some due diligence on them. I'm going to have to, EBITDA. I'll screenshot your comment. But yeah, dude, EBITDA, you've contributed a lot to the channel too. Appreciate it. And all of our moderators. So moderators, appreciate you very much. Without the moderators, the streams could definitely go off the rails. So I'm gonna have to do some research into a lot of the mobile home investments. Supposedly, I just gotta understand it more logistically. It's not really my strong suit, but I guess you allow your tenants to lease the land from you. Well, I guess you could structure it in a multitude of ways. But I don't know, if anybody has any good books on that, on investing into mobile homes or trailer parks, drop it in the Discord. I'd love to check it out, read it.
You know what I thought about you and that? That's completely true.
Man, check out this beautiful view of the Empire State Building. Austin City Limits, thank you. Sunshine After Rain, thank you so much. Appreciate it. Mike C says, I saw Graham Stephan selling his California homes. I think that's actually a pretty smart play. Hey, what's up? Michael, what's up, dude? What's going on?
First time in person.
Good to see you.
You too.
How are you? How's everything?
Good. Just got off work. This is
Oh yeah?
shocking. Yeah.
Nice, cool. You working on the throughout the whole weekend, Labor Day?
Yeah, yeah.
Yeah?
Yeah,
What,
we're-
Monday, throughout Monday as well?
Yes. Today, tomorrow, and Monday.
Dope, man, cool.
Yeah.
Are you walking to Penn?
And to get the
Oh yeah?
LIRR.
Dude, same,
So
yeah.
I live in Long Island. I live in Westbury.
Oh really? Yeah, I'm going to Long Beach, so.
Oh wow.
Yeah. Yeah, I was just about to wrap up here anyway, so we'll, I usually get to wrap up at the 2-hour mark, so. Dude, but it's dope. It's nice meeting you, dude. Yeah, I'll wrap up and let's head to Penn.
Sure.
Everybody, we're at the 2-hour mark, and I'm almost about to lose the voice because of the allergies here. But I appreciate everybody watching. We should be live tomorrow at 8:30, depending on if my voice could hold up or not. But I appreciate everybody: Christian Wilson, Jones, Cindy Foley, John, Estelle, all of our moderators. If you're new here, please subscribe to the channel, hit the like button, and we'll see you guys tomorrow at 8:30 if my voice can hold up. And to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. And I'll see everybody right back here tomorrow. Bagels and walks, photos from around New York, FredEx, Western Mass Dave. Enjoy the Labor Day.